For the property and casualty exam, understanding the precise definition of your covered auto under the Personal Auto Policy, or PAP, is absolutely critical. The exam will test your knowledge of what qualifies as an eligible and covered auto, because this determines if coverage applies in a given loss scenario. The definition is broader than just the car listed on the declarations page. Your covered auto includes any vehicle shown in the declarations, any newly acquired auto, any trailer you own, and any temporary substitute vehicle. Let's break those down from an exam perspective. First, eligible vehicles are private passenger autos, including pickups and vans, with a gross vehicle weight under 10,000 pounds. They cannot be used for commercial purposes like delivery, with some exceptions for farming. An exam question might describe a plumber using his van for work. This would typically be ineligible for a personal policy. A newly acquired auto is a vehicle you become the owner of during the policy period. The exam loves to test the reporting rules here. If the new car replaces one on your policy, it automatically gets the same coverage. If it's an additional vehicle, you must notify the insurer, usually within 14 days, for coverage to apply. Missing this window is a common and costly mistake. Next, owned trailers are automatically considered a covered auto for liability purposes. So, if your trailer detaches and causes an accident, your PAP liability coverage responds. Physical damage to the trailer itself, however, usually requires it to be specifically added to the policy. A major point of confusion the exam exploits is the difference between a temporary substitute and a non-owned auto. A temporary substitute is a vehicle you use because your covered auto is out of normal use due to breakdown, repair, servicing, loss, or destruction. For example, using a rental car from the repair shop while your car is being fixed. A non-owned auto is a private passenger vehicle you don't own but are using, like borrowing a friend's car for the weekend. The key distinction is the reason for use. If your car is in the shop, it's a substitute. If you're just borrowing a car for convenience, it's non-owned. For non-owned autos, your PAP provides liability coverage, but it's typically excess over the vehicle owner's insurance. This is a frequent exam trap. Your policy pays second, the car owner's pays first. To remember the components of your covered auto, think of the acronym SNTT, shown in the declarations: newly acquired, temporary substitute, and trailer. This shortcut helps you quickly identify what is and isn't covered in a scenario-based question, ensuring you don't fall for distractors involving ineligible vehicles or misuse. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.